Market outlook for today. It is the end of the trading day, end of the workday here on Tuesday, January 10th, 2023. So let's check into these really quick, see what's going on here. In the bond market, the 10-year treasury in the United States is about 3.6, so it's gone up just a tad. So bonds selling off just a little bit, but again, nothing to really write home about here. Really, quite honestly, across the board, stocks, everything, the indexes, nothing changing much. Everything under 1% change. So all quiet on the Western front, as they say. Crude oil again about the same as the last few days. Gold up a few dollars. Again, nothing over even 0.5% change. And at the end of the day, remember, everything is really derived from, in this credit and debt-based system that we are in, it's really deriving from, as a derivative from the treasuries and what's going on here. So the U.S. 10-year, this is, and at the end of the day, this is what we want to see too. The 50-year, see, look at this bull market we've had. We've had a bull market in bonds, and meaning the rates have come down. So the bull market in bonds, the value is going up, and the interest rates coming down. So that again is going to play out going forward. We've really seen this trend. See, obviously, if you put a trend line here, I don't think you could draw a trend in this, but you can see that the trend playing itself out where it's broken out now, obviously, right? So if you draw lines right through here, you can see this trend is broken out above this line, right? So the trend has been broken, and we don't know. We don't know what's going to happen. I still can see it going back down and bumping its head here. It looks like, for whatever reason, the 10-year got up to the low 4%, about 4.5. What was that, 3 to 6 months ago? And we had some huge buying pressure to drive the yields back down. That really would have collapsed the entire global economy, freezing up everything, freezing up the credit cards, gas not coming out of the pumps, bank holidays. We really would have massive problems. So someone got in there. Central banks got in there. We know who it is at the end of the day. They're not telling you that that's what's going on, but that is what's going on. Again, remember, they want to make you beg and beg for them to come in and ask for help, ask for CBDCs, ask for stimmies, ask for more dependency on them. That's the goal of the central banks. And again, not my own words. Read Creature from Jekyll Island, G. Edward Griffin. Read all of their writings, watch their videos, watch how the Federal Reserve is created, watch the World Economic Forum and all the unproductive class at the top, the Davos types flying in their jets. This is what they want. They want control and power. And how do you get control and power? Fear and desperate people. That's how you get your agenda passed. As Barack Obama's czar, one of his czars, or his chief of staff, whoever it was, Rahm Emanuel, said, never let a crisis go to waste. And again, paraphrasing, but that is how politicians work. Again, that's why the Founding Fathers limited government here in America, because they knew that absolute power corrupted, and you wanted to decentralize, disperse it. You wanted 3 branches of government. You wanted things to move very slowly. So at the end of the day, not many big moves the last number of days. This year, again, a little bit, stocks have just bumped a little bit in the last handful of days, and really it's probably because of tax loss harvesting. It's people kind of buying back in the market. It's the beginning of the year, so people kind of bumping back in. People got to lock in a lot of losses for the end of the year and dumping things. In the last 2 weeks, we've seen a little bit of a tick up just across the board in the stocks, in risk assets, things like that, because people are probably just generally buying back in a little bit. And we've seen weakness in the dollar, the relative strength of the dollar. Overall macro, obviously massive weakness in the dollar, as evidenced by, here, if you measure it against Bitcoin in the last 7 years, you can see the dollar has fallen through the floor. And Bitcoin does this basically to every asset. We've shown Palo Alto Homes. We've shown, let's see here, in eggs. This is if you would have held Bitcoin the last 10 or 7 years, this is your purchasing power in eggs. This is meaning your eggs would have gotten cheaper and cheaper and cheaper and cheaper, almost to zero, basically. You could buy an entire farm. And here, if you're holding in dollars, this is the same time span. You can see that life just kind of keeps going up and down, and then kind of eventually up over the long term. And let's zoom out here. Let's see, how long does this go? It goes up for a while. But again, here's a great point, a great macro to see. So the last 30, 40 years, you see your life just continually is getting more and more and more and more and more expensive. if you hold in fiat dollars, right? If you hold in Bitcoin here, your life gets cheaper and cheaper and cheaper. If you hold in dollars, again, or any fiat currency, over the long term, you keep losing purchasing power. You keep losing your economic time and energy. It just goes to waste. So this is why we save Bitcoin. It's why we save finite assets for our finite time. We don't save our finite time in infinite assets, or well, liabilities, I should say. So remember that trade. And so we know mathematically this has to go to zero. 31.5 trillion in debt. We know this has to go to zero. We know long term it's lost 99%, the dollar has lost 99% of its purchasing power. We know this is absolutely going to keep going up. It's mathematical, and we have these things to evidence that. So again, we have the overall macro kind of down. We know what's going on. We know the unproductive class really wants to keep squeezing the people, because again, if they had our best interest at heart, if the alphabet soup of agencies had our best interest, they'd be saying buy Bitcoin. They'd be saying buy assets, buy gold, buy Bitcoin, buy real estate, get in things to hedge everybody. Hey, the ship's going down, the Titanic's sinking. We need to get into assets to preserve our purchasing power. But they're not doing that. On the side, central banks are buying the most gold they've ever bought. In some of them in the last 50 years, 60 years. So it just goes to show you they're buying hard assets. You should be buying hard assets as well. That's why I love Bitcoin, because it is the hardest asset. Central banks will come around to that eventually. You're going to see more and more countries. If you don't think Putin's already thinking about pricing his energy, his oil, his commodities, his gold in Bitcoin, you got another thing coming. Because it's already been talked about. He's already been talked about. There's been plenty of news articles. We've covered it here. El Salvador there's countries coming online now, and it's just game theory. As more and more people start seeing this play out, they will start seeing the opportunities that await them the faster they jump into this. So anyway, another thing we're going to do as well is we're going to do a video quickly, hopefully this week, on the dollar being a liability and how it should be. If you watch this at all, it should be a liability on your balance sheet. It's not an asset, because it doesn't preserve or increase in purchasing power. It goes down in purchasing power. So at the end of the day, it should be a liability. It shouldn't be in the savings column and the asset column. It should be in the liability side on your balance sheet. So once you start understanding that, your brain clicks, and that's what helped click for me years ago, is understanding where certain things should be on your balance sheet, and boom, you just kind of have that light switch. So anyway, that was the big stuff. The bonds, again, just not much activity in the market. And I wanted to just hit on really those big factors, those big things going on, because it is truly important to understand the macro and where things are going. The debt, obviously, we know where that's going. The dollar price in Bitcoin through the floor. Again, if you've held the last 30, 40 years, your life has gotten more and more expensive. That's just a fact. This is from Fred themselves, the Federal Reserve economic data site. This is them telling you. The ironic part about this is they were trying to dunk on Bitcoin in this, because they were trying to show a time span of like a year. This is what the average person does. They say, oh, how's that Bitcoin trade doing? It's not a trade. This is an investment. This is a new economic system we are working in. I'm no longer in the fiat system. I don't operate in the fiat system. Real estate, everything in my life, I price in Bitcoin, and everything becomes clear to me. Because now when I price in Bitcoin like this, here I have dollars, doesn't make a lot of sense. Like life's getting more expensive, like I don't really know what's going on. But when you price in Bitcoin, whoa, that's going the complete opposite way. So now you have a true constant in your science experiment, no variables, and you can now measure everything against Bitcoin and know, I can divide anything by 21 million and know exactly what the value of that asset is. There's no gaming the system, there's no playing around. Gravity is always 9.8 meters squared per second. There's never moving interest rates or debasement, nothing. So that's the beauty of Bitcoin. Again, we'll keep our eyes on the markets every single day quickly. We'll go through the stories each day, kind of see what's going on, what catches our eye. And at the end of the day, it's all about promoting freedom, liberty, free markets, capitalism, really a new form of capitalism, an actual capitalism, instead of saving and preserving capital through Bitcoin, actual equity, instead of saving debt. That's what dollars are now. It's a debt-based instrument. So why would you be saving that? And also, again, it's not an asset, it's a liability. It's debt. It's literally debt. So it's on in the liability column. More on that to come as well, and be on the lookout for some videos on, again, how to purchase Bitcoin, but also how to purchase cold storage, how to become your own bank within a few minutes. And we'll go through, kind of walk through some of these videos going forward and touch on those things. as we move forward here. Appreciate your time and energy. If you got something out of this, please like and subscribe to it. Please share it as well. Please let me know what your thoughts are on this and what's going on. If any of this made sense at the end, and really how you're repricing and Bitcoin is breaking all the models and repricing everything. Appreciate you. Look forward to seeing you on the next one.